Alright, welcome back to a brand new video, guys. It's me, Zeroh here. Hope you guys are having a good day so far, and I hope to provide some kind of value from this video. So I wanted to respond to a question that was left on iMan Trading's Discord here. Let me see if I could find it. Okay, so this user asked, could anyone link me to any quality videos discussing your edge? I really want to dive deeper into understanding this concept and how this edge is actually defined, shaped, and discovered. Currently, it just feels more like a buzzword. In my response to that, I went to my notes app on my phone and I wrote up a quick example of an edge. So what is edge defined? What's the definition of an edge? And basically, in the simplest way I can explain it, it's positive expectancy in your entries. Let's say I drew this supply zone here, and this is actually a trade I took, and you guys can see that trade in episode 3 of my trade day journey, funded zero to funded with trade day journey. Check out episode 3 and you will see the exact trade I took off with this supply zone. So a potential edge could be every time we hit a supply zone, I go short. And you can see that it typically works out. So you have a positive expectancy because if you make an entry like that, more than 50% of the time you will get a move in your favor, right? So that's all that an edge is. How do you discover an edge? You look at charts and you try to find the best entry. So what was the best entry here? A short in this position. How could I have known this was a good short? It's been a previous good short in the past. So you draw it as a zone, and every time it hits that zone, and I'm not saying go ahead and do this, like obviously you have to test it out for yourself, collect statistics, and refine it, right? I think the refining it is the most important part about it, but it can be as simple as that, right? And this is the important part here. I don't know if you guys could even read that, or that might be too small of the text, but I'll read it out loud. Look at hundreds of examples, single out the best performing ones, and look for as many similarities. Keep refining best entry and exit points with the examples from history, and as you keep trading it and getting new data, update it as required or as needed. And the example I used was the H pattern is my defined edge. I discovered it by noticing that trends usually have some sort of quote-unquote pullback before they continue and make second leg down. And then I shaped it over time to better understand at which point I should enter where my risk is limited, because I know how the pattern should behave. So if I see signs it's not behaving as it did when the pattern works best, I exit or minimize risk by cutting size. I also go extra heavy on the trade if factors like market breadth, order flow, and option activity tell me we can expect higher participation on the sell-off, etc., etc. So I've gone over the H pattern multiple times in the past, so I'm not going to go ahead and really dive too deep into that, but that's essentially my answer to that question. And I wanted to connect that topic with another question that was asked here in my forum on this server, and it was left by this user. Can I get your opinion on scalping versus swing trading? I've seen your latest video, and from what I'm seeing, you're doing great on scalping. I'm currently testing on swing trade on MES 1 minute and 5 minute chart, where I held my position for about 15 to 45 minutes, or even 2 hours if I'm getting trapped. Was able to make some profit even though they're just paper trading. Purposely, I'm trying to combine scalp and swing where I can feel comfortable holding my losing position when I missed entry point, while I still getting profit on price actions reversal. I don't understand that part too much. Price action and volatility on NQ and standard ES are crazy for swing trading. That's why I'm testing this on MES. The waves are much calmer and more predictable. So I think the main thing to get out of this is my opinion on scalping versus swing trading. And this is actually something I was thinking about a lot the other day because stuff happened with the funded account. Again, go check out those episodes, specifically episode 2 and episode 3. Basically, in short summary, we hit a high on the account of about $11,800, which is $1,000, $800 in profit. The original profit target is only $1,000, but because of the inconsistent rule, I had not yet completed the challenge until assumingly that's not even a word. Well, I assume until I hit 2,000 plus profits, because one of my inconsistent days was about 600, I believe. So I would have to hit at least like 2,000 something for that to be 30% or less of my total profit. Anyways, I've been experimenting with this whole super scalping thing. If you go to my channel, right, I have 9 sessions that I've completed, and you can go ahead and watch every single super scalp I've taken, plus the ones I've taken in my zero to funded journey. So I've been experimenting a lot with scalping, but my normal strategy, in my normal strategy, I should say, I take swing trades on occasion. Not every single time. It's usually an intraday trade that turns into a swing trade. I don't always necessarily go into a trade planning for it to be a swing trade, but it's always an option, right? It's always it's not that I plan for it, but I'm ready for it to be a swing trade if it turns out to be a move. Like, I prefer it to turn into a swing trade because that means I can capture a larger move. And so my opinion on scalping versus swing trade. Previously, before diving into this super scalping, I would lean more into longer term trades, not necessarily week holds or month holds. I'm talking about 1-2 hour holds that I can leave runners that will potentially go 1, 2, 3, 4 days. I don't normally hold a trade longer than a week, maybe a week, 2 weeks max, but I don't hold much more than that. And there's a reason for that. But like I said previously, I leaned more towards that. I was not necessarily, I hate super scalping, or I hate scalping, never gonna do it. I would always implement some sort of scalping, right? Because sometimes, let's be honest, I'm bored and there's no real trade to take with heavy size on my normal strategy, so sometimes I'll just mess around with scalping. And that's what this super scalping experiment was. It was just having fun, trying it out, potentially turning it into a strategy that it makes up a bigger portion of my P&L, but it was just mostly experimenting. Now that I've super scalped for a while now, it's been a couple weeks, and I got some data behind me, and I've experimented with it, and I've gave it an honest attempt. My opinion remains the same. I lean more favorably towards, I wouldn't necessarily say swing trading, but longer than an hour hold trades than I am for like scalping, like 4-point moves, right? It's just, and I'll explain obviously my reasoning, but I'm also gonna start off by listing out the pros of scalping. So there are pros of scalping, of course. So let's go ahead and do a pros and cons list here. Scalping, pros and cons. So a pro, less time investment, right? Obviously, because your trades are, your profit target and your stop loss are very small in comparison to what the average range of the instrument you're trading typically is going to be. For example, if we're aiming for a 4-point stop loss, 4-point take profit on NQ, an instrument that can move sometimes upwards to 200, 300 points in a day, your trades can last literally seconds, and you guys have seen that. That's why it's called super scalping, because it's quick, right? It's fast. So theoretically, on a good day, if you hit a couple good trades in the first 10 minutes of market open, you can be done within 10 days. Versus me, again, sometimes I can be in a trade for multiple hours. And that doesn't mean I necessarily have to be sitting in front of my computer watching it tick by tick. But, I'm gonna typically, especially if I'm in with a heavier position, gonna be monitoring it pretty closely. Again, not tick by tick, but I'm gonna be aware of where price is at, especially in the key zones or key levels that I think are important to monitor specifically. So it's gonna be a bigger time investment, and I'm also, when I'm looking for entries, it's gonna take a while. Sometimes it takes me multiple attempts to get my ideal entry. So there's gonna be a longer time investment. So I would say a pro for scalping is less time investment. Another thing I would say is it's easier. Well, this is both the pro and con, and I'll elaborate what I mean by this. But I feel at least it's easier to follow trade plan. AKA, if you're a person that struggles with taking a loss or taking profits, right, you don't have to do much thinking in those regards, because typically you're going to have a set stop loss take profit. For me, it was, when I was experimenting with super scalping, it was 4 point stop loss, 4 point take profit. I've seen people like Iman do 5 point stop loss, 5 point take profit. I've seen people do 5 point stop loss, 7 point take profit, 5 point stop loss, 10 point take profit. It's up to you, right, what you set up. But once you have that set up, and specifically with brokers nowadays, where you can set it up as bracket orders, right when you enter the trade, they're sent out, right, and they're there. And so typically, like I said, because trades are gonna last 30 seconds, 2 minutes, 5 minutes max, or I'm not max, but 5 minutes is usually on the longer end for these scalps. There's not much time to be like, oh, I'm gonna extend my stop loss, right? And if you're struggling with that, then you gotta work on your discipline, right? But I would say a pro with scalping is you're typically it's gonna be easier to follow trade plan, because you don't have much time to mess around with it, right? Trade's gonna execute. If you have your bracket set up already, boom, you don't have to do much. You just let it play out. And obviously, if you add discretion to your trading, like I do, there's going to be times where I extend my take profit after I've entered the trade, and I also adjust my stop loss, let's say, to break even once the trade has worked out in my favor a certain amount, stuff like that. But generally, there hasn't been a single time where I extended my stop loss. That's just not going to happen, right? The issue can come with, now the flip side of that is, because these trades are very short term, it's very easy to start over trading. Or, what's the word? Over trading. And I feel like there's a lot of confusion with over trading. Over trading doesn't mean I normally take 3 trades and I took 5 trades, so I over traded. Sometimes that will be the case, but I responded to somebody and I liked my response. I don't know if I could find it right now. I think it'd be a lot of work, but actually, let me go ahead and try to see if I could find it. When does this become overtrading? When the reason for entry is not in my ideal trading conditions, not a setup strategy I have edge in. It's part of my setup / strategy, but I'm being careless with my entry, aka not waiting for best potential entries. I am fatigued / emotional, and that might affect my trade management and judgment. So if any of those are true, then it is overtrading. Taking a lot of trades is not necessarily overtrading, even if it's more trades than you normally take. But with scalping, I do feel like it's a lot easier to start overtrading, because again, the trades are very quick and it's very easy to press a button and be like, well, I'm only risking 4 points. even if I take the loss, whatever, right? So it's easy to like become less selective and start over trading for sure. I feel like there's a lot more pros I could potentially come up with, but these are the big ones. Let me see if I can think of any other ones. Any other cons? Obviously, if we want to get to the nitty-gritty, commissions will rack up a lot, especially if you're trading something like M and Q. But, you know, it's not too big of a con, but I mean, it's something to take into account. But there's also, like I said, some people only will, even if they're scalping, they'll only take 1 or 2 trades, while some people can take 50 trades if they're scalping, right? It just depends on your strategy. I'd say another con, and this can be I don't know if it could be a pro, can rely a lot on discretion. I don't know if I want to put that down actually. Here's the thing where I wanted to connect this back to the edge conversation. And I talked about this briefly in episode 3 of my Zeroh to Funded journey, I believe. Well, it's part of what I recorded, but I don't know if it's going to make the final cut. But this whole experimenting with super scalping, we got to remember, super scalping itself is not an edge, right? Super scalping is just a manner of trading. It's a style of trading. It just dictates the time frame I'm going to be looking at and my take profit, stop loss size usually. But super scalping in of itself is not an edge, just like swing trading is not an edge. Now, there is different potentials of edge in each, depending on what manner or style of trading you're gonna take. So, at least for the way I trade, I do feel like I have a lot less edge when I'm scalping, because at least for my particular edge, my edge relies on catching bigger moves. And if I'm scalping, I'm missing out on a lot of potential reward, which is required for my strategy to be profitable in the long run, because I rely more on the favorable risk reward than I do the win rate. I do still typically keep a high win rate, but I require I require to hit home runs here and there to be profitable for how I trade normally outside of scalping. And so when I jumped into super scalping, I still took similar entries as to entries I would take with my normal strategy, except I wasn't executing them in the same manner. I was executing them in the style of super scalping, which, like I said, so far was still somewhat profitable for me. If you guys look at the 9 sessions and you look at every single trade, add up the P&L, I haven't done it myself, but I'm pretty sure I came out to be profitable. If you added up every single session that I've taken so far. But as I was looking back, I think I was profitable not because I was super scalping, but in spite of the fact that I was super scalping. I think I attribute a lot of my success with super scalping so far to my own personal discretion, in the fact that I was extending my take profits a lot of the time and adding to winners or adding to positions that I felt more confident in. And as seen in my Zeroh to Funded journey, there was a lot of times where I had the right idea. My entry itself, if you zoom out, bigger picture, weren't bad entries, but because of the fact that I was super scalping, I was taking losses because either my stop loss was too tight for the trade idea, like I was getting stopped out, but the trade idea wasn't yet invalidated, and or I had to limit myself on taking entries because I knew that my stop loss was only 4 points. And so when otherwise I would normally take an entry, I wouldn't do it, even though the reward was there because of my tight stop loss. And when I did nail the entries, even with the tight stop loss, the reward was capped. Even sometimes I would extend them, take profit, the trade would end up running 20, 30, 40, 50 points plus afterwards. And that happened multiple times. And so noticing that, I realized super scalping is a handicap to me. It's not benefiting me. The pros that I noted here, it's easier to follow my trade plan. I'm already pretty disciplined with my trade plan, so it's not really helping me too much. And I mean, the one thing I would say is it was making me selective because of the fact I knew I had an only 40-point stop loss, so I would. Sorry, I fucking hate that notification sound. I need to turn that shit off. That just fucked up my train of thought. So because I knew I had such a tight stop loss, I would look for the most ideal entries. But I already do that, right? Except I give myself 10 points, 15 points, 20 points sometimes, which usually benefits me because I'm going for those bigger moves. And the other pro, less time investment. I don't care. I'm already, I don't mind spending hours in front of the screen watching the markets because I enjoy what I do. I love trading. And even when I'm not in trades, I'm going to be up to date with what the markets are doing and whatnot. So that's not really a big pro to me, right? I don't mind spending time in front of the screens, right? So the pros that come with scalping are not enough to outweigh or undo the cons that come with super scalping. And I didn't write them down, but it limits your ability to catch moves. So let's go to a chart here and kind of elaborate further on what I'm saying. For example, here, perfect example. If I'm scalping this and I have a 6-point stop loss, let's say, where's the only spot I can take an entry, at least to the way I trade, because I am a perfectionist? I would only look to take an entry here. For at least the way my mind works, to catch this move, my entry spot is here, right? And so if you go back to the Zeroh to fund it and any of my super scalping sessions, you'll see that I normally go for entries here. Sometimes, even if I take an entry here with super scalping, I'll get stopped out, and then I'll go in my favor, and I won't catch it because getting an entry here, I feel like I'm chasing it, so I won't take it. I need to get, or I don't need, but I prefer to get my entries here. And sometimes with super scalping, that's not good enough, because if I get an entry there, for example, it's possible I get stopped out there, and then yeah, I could potentially re-enter it, but then that's 2 attempts, and lowers your chance of being profitable. And let's see, I do get an entry and I don't get stopped out, and then I cut the trade here. Well, what about all this? I missed out on it, and that's not ideal, because if I take an entry here, I should get rewarded for the fact that I got such a good entry, right? And so with super scalping, I just can't do that, Or, I mean, I guess I could. I could extend my take profit continuously, but I was just missing out on so many moves. If you look at the super scalping video, I was just missing out on so many moves because of my stop loss being only 4 points. If I catch a 10-point move, that's a decent move in my favor, but the actual potential for the move could have been a lot more. I don't know what this move actually was. 46 points, right? And if I'm only catching 10 points of that, that's not good enough. It's not good enough for the entries that I'm taking, for the edge that I have. Hopefully that makes sense. So my opinion, going back to the original question, super scalping versus swing trading. Do I think super scalping has, or scalping in general, has some advantages? It does. Do I think you can be profitable trading scalping? Yes. Like I said, scalping is just a method of trading, a style of trading. The edge doesn't come from the fact you're scalping. Although scalping might be better suited to your personality, and that's why people always say find a strategy that fits with you. But also, you have to understand what makes your edge profitable, because like I talked about in my Talks with Zeroh video, it can be a fact that you're trading a pattern, for example, like the H pattern, but you're not trading it correctly to its full potential. So let's go to an example here, and we're probably going to struggle to find an example because we haven't been in a downtrend. Like I said, H patterns are more ideally found when you're in a 4-hour downtrend. So let's go back to when we were in a downtrend over here. We can probably find an H pattern over here. Okay, here we go. This is basically an H pattern, right? So you get a couple green candles, and as you start getting stalling, you can make an entry there. Put your stop loss above like this little consolidation zone there. It's not gonna let me draw it good, but fuck. Somewhere there. And then you could target new lows there, and then you could leave runners, right? If you're not leaving runners on this trade for that entry, look at all the potential you're missing out on. You cannot do that, right? And that's why my strategy relies a lot on taking multiple contracts, at least 2, right? Because if you take 2 contracts here, here's your stop loss on both contracts. Here's your take profit on one contract, and then you let the runner go, and then you could either trail your stop, or however you want to do it, or when the chart tells you to sell. Let's say when you break the pattern of high, low, lower high, lower low, lower high, lower low, it broke. Oh no, you can say it broke it there, so maybe there you would have taken take profit too, right? So, right, but if you're trading the H pattern, for example, and you're capping your win here, and you're taking all your profits there, and you're missing out on this, in the long run, not catching this is going to hurt your chances of being profitable with the H pattern. And so it's not so much the H pattern didn't work, it's that you didn't execute it to its full potential. Like you can see it even went even further. So hopefully that makes sense. And at least for me, the way I trade, scalping diminishes the edge that I trade with. So my opinion is that longer term trades are better, because it allows me to capture more of the move that I'm looking for. But again, my opinion is not that super scalping doesn't work, or super scalping is bad, or scalping in general. It's just, for me personally, it's not the best. It's not suitable for me, for my edge. I think the best edges with super scalping would be edges with high win rates. Or maybe, and this is where he was talking about, where, no, not here. He's testing on, what did he say? He's trying to combine scalp and swinging. That right there, I think, is the best of both worlds. Which obviously, yeah, common sense. I think that's what you should be aiming for, kinda. At least for my edge. Let's say I wanted to scalp that move, so I wanted to have a tight stop loss. You can scalp the move and keep a tight stop loss and take profits early, but always leave that runner for that potential to catch more of the move. And as long as the chart doesn't invalidate the move, like if you had a short entry here, you could still be potentially be in it here right now until the chart does something to invalidate that. Like let's say you could put your stop loss like just above break even there, and so far it wouldn't have been hit. And this could potentially turn into a swing trade, right? Because if we close somewhere over here, there's no indication to sell, and you just keep holding, and it could potentially go into a much larger move, right? So yeah, this video has been pretty long. Hopefully I've gotten my point across. If you still have questions regarding the topics I've covered today, go ahead and leave the comments in the description down below, and I'll try to answer them either in a follow-up video or just respond to your comment, or you can message me on Discord and we can have a further discussion on this. But in conclusion, to wrap things up, super scalping is on an edge. However, it's a style of trading, and it can be suitable to you. Maybe you find that you do a lot better scalping versus holding trades for a longer time. Depending on your situation, your personality, your edge, all that stuff comes into play, and it's important to take a deep look at the way you trade, and I would put it through the different lenses of different styles of trading. Do you think your edge would benefit if you held on to the position for longer time frames? Maybe your edge right now, you've been scalping it, and it would perform better if you were holding the trade for longer time periods. Like I said, like getting multiple contracts, selling one at early take profit points, and letting that last contract breathe and run to its potential, right? Because like I said, hitting those home runs, hitting those big trades, that big trade that can cover 10, 20 plus losses is very important to my edge. If I don't hit those big home runners every once in a while, I probably would be closer to a break-even trader, or just barely profitable, or maybe even I would be losing money in the long run, because those big winners make up a good significant portion of my P&L. And the only reason I'm able to catch those home runs is because of my way of managing trades, where I take profits early on, so I feel comfortable holding the remaining position for that potential big trade. And I'm always okay with the fact that if I've already locked in some profits, I'm okay with the runners going all the way back on me to break even. Perfect example is today with the trade day account. Look at this entry. It had gone in my favor. My entry is somewhere around 9.15. I had come all the way down to, so this ran 30 something points on me, and I let it come all the way back to break even. Why was I okay with that? Because I was aiming for that bigger home run move, and look, I eventually got it. And I got my entry in a similar spot, and I let it run, and I got that bigger move. Okay, that's what I'm talking about. My edge requires me to be able to hold the trade for that. And when I was super scalping, I was missing a lot on those type of moves. So I think moving forward with the funded account, I'm going to be doing a hybrid of scalping in the sense that I'm gonna still be having those shorter time, like 5-10 minute hold trades, because I'm gonna be taking profits along the way, and I'm gonna be keeping tighter stop losses, like 10 points and less. And so if you consider that scalping, I'm gonna continue scalping with the Zeroh to funded account. But it's gonna be very likely that some trades are gonna be held for hours or about that kind of time, because I cannot swing trade on the funded account, but I can hold trades for those longer 50 point, 100 point moves that I like to capture. But yeah, that's all I had to say. Again, I hope I got my point across. I hope it was I hope you were able to take something out of this video, right, and benefit from it. And again, if you still want to continue this discussion, I would be happy to, either in the comments, Discord, or in a follow-up video. But thank you for spending your time listening to me talk about my opinions. Thank you for those people that left those comments that basically were the origin of this video. They led to this discussion happening, and thank you for those comments. Continue leaving those comments. I enjoy responding to them and giving you my thoughts, because I at least think that they can offer some kind of help or different perspective. And I think at the end of the day, it's good to have these kind of discussions, because it can potentially help us better understand our own edge, our own strategy, and if I'm able to help in any kind of way, that's a win-win, right? But yeah, not gonna waste any more of you guys' time. Thank you so much for watching the video. Enjoy the rest of your day. I hope your guys' trading is going great for you guys, and I'll catch you guys in the next video. Later.